Thinking of buying a home? Well, the price tag isn't the only thing you need to budget for. In this video, I'm breaking down the hidden costs that most buyers overlook, and they could cost you thousands. If you're new here, hi, I'm Nate Friesen. I'm in my 4th year of selling real estate in Ontario, Canada. I've helped countless families with their real estate goals, and I'm here to help you too. So stick around because we're going to be looking at the hidden costs of buying a home and how you can prepare properly. First up is inspections, and this one is commonly overlooked because most people don't think about it until they're ready to put an offer in on a place, and then they're like, oh yeah, I'd kind of like to know if there's anything I should know about this home, and then they think about having to hire a home inspector. Depending on the size of the property, this can range from usually around $400 to $800 or more dollars Canadian. That is, depending on the home inspector and, like I said, the size of the property. Same thing goes for septic inspections, well inspections. Those are additional inspections that you'll have to bear the cost of, and they can also range anywhere usually under $1,000. Same thing with appraisals. If you're getting a mortgage, which 9 times out of 10 you are, I don't know many people who can afford to buy a house completely cash. So if you're getting a mortgage, your lender might order an appraisal. Now that normally falls on the buyer, and most people would just assume that the bank pay for it since they're the ones wanting the appraisal, but unfortunately, no. The bank might order an appraisal to make sure that the value you offered on the property is the actual market value of the home. If they ever had to resell the home due to you defaulting on the mortgage, they want to make sure that they're going to be able to get their investment back. And any other inspections that you can think of are all part of the buyer doing their due diligence, so most times it falls on the buyer to pay for it. On the high end, I would budget anywhere from $1,500 to $2,000 to make sure you have enough money for any inspections that you might need to do on the property. Another important note, make sure that this property is the one that you are completely certain of if you're offering on it and doing a bunch of inspections, as that's not a cost that you get back if you find something and walk away from the deal. So just be prepared that you might lose out on that money, but that's the whole point of inspections, that you lose out on a small amount of money to save yourself a large amount of money for any issues you might discover. Number 2, taxes. There is multiple taxes, and I'm talking specifically in Ontario, Canada, as that's where I'm based, but chances are it's going to be the same for you in your local province, state, or wherever you're watching this from. So some of the things I'm talking about here are HST and GST. If you're buying a brand new home from a builder that's not built yet, chances are there's going to be HST applicable in addition to the purchase price. So if you're buying a house for $1 million, again, I'm in Ontario and our harmonized sales tax, or HST, is 13%. So 13% of $1 million new home build is $130,000. That's some serious money. That is going to be in addition to what you're offering on the property. So you have to make sure that you have that money set aside cash. New home builds are a beast of their own, and I'm not going to get into that into this video, but I did just want to make sure that I mention that, as that is a major cost that people often overlook because they don't even think about it when they're buying a new home. Now, when purchasing a new build and paying taxes on those, there are usually rebates that you can get, so make sure you talk to a tax specialist or lawyer to see what those are so that you can figure out how much you need when it comes to purchasing a new home. Another tax that people often overlook is land transfer tax. So the land transfer tax falls on the buyers in Ontario, Canada. If you're buying a home, you have to make sure that you have the money set aside to pay land transfer tax on closing. Now, in Ontario, this is broken down in multiple different percentages at different price brackets. So it starts out at a certain percentage under $500,000, and then between $500,000 and $800,000 or $500,000 and $900,000, there's a percentage of that portion, and it's calculated like that to figure out what your total land transfer tax you're gonna have to pay on closing is. In Ontario, you can find a land transfer tax calculator online and just type in the purchase price and where it's located, and it'll do that calculations for you, so you'll have a rough idea of how much you're going to need to set aside. But in Ontario, there's also a land transfer tax rebate for first-time home buyers, so you might want to check with your mortgage broker or lawyer to see if there are any benefits or rebates that you can get to help ease this burden on you. Now, in Ontario, this is up to $4,000, which will help you save some serious money when you're making all of these payments on closing day. One other thing you need to check about your land transfer tax is that in some municipalities, there is a municipal land transfer tax in addition to the provincial one. For instance, I'm in Ontario. Toronto, Ontario has a municipal land transfer tax in addition to the provincial one. So you need to make sure that you're budgeting for both instead of just the one. So definitely look into your municipality's land transfer taxes. Again, this is a big one that could cost you thousands of dollars if you're not prepared. Number 3, insurance. There are usually a few different types of insurance that you need to be aware of and budget for. In Canada, CMHC insurance is almost always mandatory on mortgages where you're putting less than 20% of a down payment on a home. Basically, CMHC is just Canadian mortgage insurance. So if you're planning on putting a down payment of less than 20% on your new home, make sure you talk to your mortgage broker to find out exactly how much you'll need for mortgage insurance. Now, once you've built up 20% of equity in your home, that CMHC insurance is no longer mandatory. Again, this one can be thousands of dollars, so make sure you're talking to your mortgage broker to find out more about that. This basically ensures that any issues you were not aware of related to title that may arise afterwards will be covered by title insurance. Now, this could be something like an existing fence that was put up that now the neighbor is claiming is encroaching on their property. If you had to demo that fence and put it back up in the proper place, oftentimes you could probably claim that under title insurance. Let me preface this by saying I'm not a lawyer or an expert in title insurance, but that was just an example where title insurance may be applicable and may help you out. Now, if you've been renting for a while and this is your first home purchase, you might not be aware that you need home insurance. Home insurance is mandatory and not exactly a one-time payment that you can budget for, but you need to make sure that with your monthly budget, you're budgeting for home insurance. Number 4, legal and bank fees. People often forget you will need a lawyer to process the transfer of ownership from the one owner to another and deal with all the paperwork that ensues for that. These vary based on the lawyer, but usually I find they're between $1,500 to $4,000. So you need to make sure that you're budgeting for that when you're saving for your down payment, because the lawyer needs to be paid too. In addition to the legal fees, just because the lawyers are the ones who take care of this on closing, there's something called adjustments. Now, these are things like hydro, gas, property taxes, etc. Basically, if you're taking over midway through a billing cycle, they need to make sure how much onus falls on the previous owner and you based on where you're taking ownership in that billing cycle, so that you're not unfairly billed and the old owner's not unfairly billed based on the time period they were living there. And those are all sorted out and paid for on closing. Another potentially big fee if you have previously owned a home and are moving to a new home is the mortgage discharge fee. So if you still have a mortgage on your current home and are moving to a new home, based on where you are in your mortgage term, you will have to pay a fee, and that ranges based on where you are and your interest rate and how much is left on your mortgage and all that stuff to break that term. Now, if you're 1 or 2 years into your 5-year term and you break that mortgage, it'll definitely be a lot more expensive of a discharge fee than if you were, say, 4 years into a 5-year term or 2 years into a 3-year term, etc. So make sure you talk to your lender of your current mortgage to figure out how much that fee is to break that term. The final hidden cost, which kind of encompasses a lot of things, basically unexpected costs and home maintenance. When you're buying a home that you've never lived in before, there's always the potential for unexpected costs. Now, this is why you do your inspections to make sure and mitigate how many of these unexpected costs will arise and how many that you're aware of. And sometimes, like I said, they're unexpected. Things just happen. You could move in and a week later your fridge stops working and now you've got to buy a new fridge. And unfortunately, most things are only warranted by the previous owner up until the date of closing. Anything after that, after you've taken ownership, is 100% on you. Usually. I always advise talking to your lawyer if you run into any issues to see what they say, but that is the usual case, that once you take ownership, you're responsible for anything that happens after that, unfortunately, because it might have been working fine for the previous owner up until the day of closing, and then, like I said, a week later, it's just the luck of the draw, right? Now, unexpected costs are, like I said, things like appliances breaking down, plumbing issues, stuff like that. And then home maintenance kind of falls into that same kind of thing where, you know, you might have bought it knowing that, okay, the roof is going to need to be done in the next 2 to 5 years. So now you need to make sure you're setting aside money to fix that roof or replace the shingles when the time comes. Same thing for if you know that the furnace is really old when you're walking through a home when you're purchasing and knowing that, you know you're going to anticipate needing a new furnace shortly. Or same thing goes with your air conditioning unit. Some things are unexpected, some things you can anticipate, so just make sure that you've got enough of a reserve fund set aside for any of these unexpected or anticipated expenses. Now, if you already own a home or you've purchased a few homes before, or you're an avid real estate investor, you probably are already well aware of these costs, but sometimes they get overlooked or forgotten about. And if you're a first-time buyer, these are things that you need to expect when you're buying your first home. I hope you guys have found this very helpful, and if there's any other questions you may have about home ownership or real estate in general, feel free to leave them in the comments below, and I'd love to address them in future videos. And if you haven't already, like the video, subscribe, and I'll see you guys next time.